Hey traders, this is Christian Promertz, Tribeca Trade Group, and today is Friday, September. I keep saying I've said this almost every day this week. It is February. For some reason, I keep wanting to say September. It is February 15th. Maybe it's been a long week. It has been a very long week. There's been a lot of names for earnings that by the time I get to the end of the week, after a couple weeks of earnings. It's pretty exhausting. It's exhausting because you want to catch all these names that are moving like crazy. And there was a lot of trades we did this week. There was a couple that I did not take, and they worked even well too. So there's just a lot of movers, a lot of things really responding pretty well. So we'll go over a couple of those. We'll go over some of the trades that we put on. I was so excited at the end of the day yesterday because I think so there's three trades that we were talking about in the room, and they all worked pretty well for earning. So it's just just a great way to end the day yesterday. And then today, today's options expiration, and I'm surprised at how well that the market ended for the week. I mean, close on the absolute highs there in the S&P. So I'll go through the index charts, and then I'll go through we'll look at the sector performance. But I always like to give this video kind of after the week is over and kind of reflect on what transpired, and then also kind of pivot a little bit to next week. And I'll tell you, I think that there's some interesting things going on, different groups participating. So uh, this market seems to be. I know we've had a crazy week, and why don't we jump into the performance? But I still think there might be opportunities in just different groups of stocks. I'll tell you what I'm hoping for, and I don't mind sharing this when you can hate me for saying this, but I wouldn't mind a little bit of a rest in terms of performance because I just don't want to see us get too overheated. But it is what it is. It's the pain trade, and I like to quote different people who I just agree with, and that's the beauty of Twitter these days, is you can find a lot of people that you agree with and that are really helpful to you, and also on TV. Like I like Tim Seymour on the Fast Money Show. What he's been saying has been right for the last couple weeks. The pain trade is higher. It's something that I believe in too. I think there's. I'm not gonna call anybody out, but there's a lot of other people. You take like a couple people on that Fast Money Show, and they've got their pencils out and talking about, oh, we're not going to go through this line in the S&P, and we're not going to, no way, we're going to have a pullback, and all this predictions. I mean, I really try not to make predictions because, listen, it's really difficult to make predictions and be right. I mean, other than just throwing out general statements, which I see people do that as well. So no matter what, you throw out a couple general statements, you're going to be right when you do that. But it's really difficult, and I'm not faulting them. But I've said for weeks that I don't think really making predictions to say that we're going to stop at this line or we're going to stop at this level in the S&P is the right way to kind of go about trading. I think that's not going to help you make money, really, in my opinion, to talk about different levels and say, oh, there's no way we can go past this level. What you want to do is kind of look for setups and individual names and trade those setups and have a stop, know what you're going, know where you want to take targets and know where your exit plan is on each position before you get into it, and just kind of go from there. I mean, and dial down the risk. If your gut feeling tells you that we've gone too far too fast, then you take off some risk. But not about to go ahead and short the market just because we're approaching a key level. I think that doesn't make a lot of sense to me. But so here we are. Speaking of levels, we're back above the 200-day moving average, and again, I will always give you what I do. The Qs underperformed a bit, but sorry, if you go to the performance, which I was just showing up here, what was the big standout for the week? Both that, I mean, a few things that I see, and what I'm looking at is just the 5 day change. Sorry, my eyes gravitate here, and sometimes I don't explain what I'm looking at. But first of all, the SPY was up 2.6% for the week. The diamonds were up 2.9%. You want to look at it, and I'll go through charts as I pull some of these up, but you want to look at an interesting chart, and I know the Dow is, kind of a bit more old school. It's just 30 names and price weighted. But look at the look at the strength in the Dow. The Dow stocks. I don't hear too many people talking about, how well the Dow has been doing. And again, you can make, we got some levels up here. I mean, there's overhead resistance all the way through this that we've basically just cut through. And really not much of a hesitation at all. There wasn't any major hesitation at the 200-day moving average. So that's diamonds. I've just brought a chart up of the Qs. They were not where the momentum was today. So I want to talk a little bit about that. Now, I don't know if that's just a 1 day rotation. We'll have to kind of see next week if it's got some legs to it. I'm going to go over some sectors, but I wanted to talk about the big indices first, and then I'll bring up sectors. But the transports, and then I'm going to get to the star performer, which was small caps for the week. But the transports were up, what, 3.9% for the week as well. Now they're at the 200, so you could make the argument, oh, that's as far as they're going to go. I'm just kidding. But look at the look at the small caps. They were up 4.2% for the week. So what's in the small caps, right? It's always good to know what the hell's in these things, rather than just think it's anything that's small cap. It's the banks are the biggest weight in the small caps. They're about 10% of the IWM. So they really had a decent week. They had a great day today, and I don't know if the bank movement today was because of Uncle Warren, still very bullish about the banks. Warren Buffett, those 13 Fs came out, so I don't know if that helped or just overall. I mean, so I'm going to look at that chart in a minute too. But I did not get into any of the banks today. I've been long standing that I don't really like to have a lot of positions in the banks, and I've been either equal weight, basically no positions in the banks. I'll just say it flat out. But every once in a while I like to put on a position, so I'm going to look at the J.P. Morgan chart in a second. Also, IWC, the microcap ETF, was up 4.4% this week. So microcaps as well, very very strong. So to me, after a big week like this, my gut tells me that, again, I said about predictions, right? How I don't really like to make predictions, but I would think, I mean, and how I traded a little bit today is, so let me just bring up, I've updated last week's newsletter with some performance already. But yeah, I mean, I kind of, which I normally do into long weekends, I've kind of, and to weekends themselves, I just kind of reduce some of my positions. Because what happens to me sometimes, and I'm guilty of this, is sometimes you end up accumulating positions, right? Sometimes everything looks good and you end up adding a lot of positions, and by the time you get to the middle or the end of the week, I start to go through and analyze and say, hey, maybe I've got a couple too many positions on. I don't want to, I always use this phrase, I don't want to get over the tips of my skis and risk, because if we do get a little bit of market volatility, I don't want to give back all the gains that I've been accumulating so far this year. So at some point, you got to put that away, especially if you're trading options. And this video, again, is for information purposes only. I'm not telling you what to do. I'm just telling you what I do. But it's essential in option trading to make sure that you're putting some money in your pocket. Even withdrawing some money from your trading account as well helps as well. But it's different. Trading stocks, you can honor thy stops. You have no maturity on stocks, so you could trade them a little bit differently. And that's basically what I do too. When I try to reduce positions, I go right to the my option positions first to say, let me take this off, let me take that off. And it's a tough mental challenge, because you obviously got into that position for a reason. But at some point you're not going to be right 100% of the time. So you have to sacrifice some of those positions. But yeah, look at the week's performance. There was actually not one sector on my U.S. sector watch list that was in the red this week. So really outstanding performance. Look at the oil and gas names this week, 9.3%. And we did start to see a pickup in energy call buying. It's kind of been, I'll say two things about the energy call buying, right? Months ago, we saw a lot of it and it fell flat on its face. All the call buying in energy names months back was horrendously, terrifically wrong. So, how you like those adjectives? Now we're seeing a little bit more, and again, most of them are really small bets, right? I've got Exxon up here. I can't, because I comb through and I don't see any Exxon bets. I mean, these are all sweeps, right? These are all the most aggressive trades. I mean, I think you have to really get into this. I mean, most of the trades that we saw today, overall in option activity, it's tough because people have been rolling positions all week long. They've reduced February positions and they kind of roll. But I mean, some of these you have to check open interest, but these are small. These are tiny trades. CVX, there's been a little bit. Chevron, again, all versus open interest. This is February, so this must have been closing. March. So there's been little stuff here and there. Really, I've talked about the XOP orders. We've been seeing XOP a couple times. We actually saw an XLE order today. This was rebooked, but I believe this was bought. It was a $300,000 trade. I talked about XOP earlier in the week, I believe, the equal weighted energy and gas oil ETF. So it looks like they made some money with those trades, and I'm not going to rehash because I'm already 11 minutes into the video. Robotic stocks did very well. I mean, just about everything today. And then before jump into some charts in some U.S. names, sectors, and individual names that I find interesting. But let's just look at the international performance. A lot of I was going to say two-way flow. That's not right. But the performance of emerging markets, I think the EEM ETF was basically flat or unched for the week. And if you look, there's a lot of names that were in emerging, like Vietnam was up 6.6%. It's an interesting chart. It's back over the 200-day moving average. Also, the Shanghai ETF, after being closed, Shanghai for a week, they were up 5.1%. So you've got some emerging markets that did pretty well. Brazil was up 3.2. But then on the worst side, and these are also in EEM, some of them smaller weights, but you have South Africa, Indonesia, Philippines. They also, so again, basically why if you owned EEM, why it was flat. Plus the stronger dollar this week didn't help with in emerging markets. So that is just performance for the week. And again, I like to kind of do that review. But so let's look at energy first. So I'll tell you what I did today. I've been kind of staring at energy names all week long. I jumped into OIH. I did this was so it's kind of tough because it feels like a chase to me with OIH up 2%. But I need a technical level to trade against, and I've been waiting, and I've been setting alerts all week long, and so basically, my what I'm looking at here is the top of value, which is the red line. That's 1735. If you can't see that on my chart, so 1735 would be support to trade against. And if you want to give yourself a little bit more bumper room, maybe 17, which is the 17 is the stop on my trade. Again, stock. I mean, OIH is a $17 stock. No reason to complicate things, in my opinion, and trade options. It's 17 bucks. So I bought a couple hundred shares of this, and if it holds or if I get another chance, maybe I'll add to it. But Halliburton and Schlumberger are the two big weights in this one. XOP, that's going to be right at this again is kind of it was a difficult, and I was whining about. I say that a lot too, because I do whine about stuff, but. Really, the XOP, I've been waiting for it to get above value. Now the problem is that as it went from the 50-day moving average to the top of value, I'm going to miss on all this performance. because I would really rather trade this versus the top of. I would really rather trade the breakout above value. So that's difficult. It just did not set up well for me. XLE, which you have Exxon and Chevron, this got above this got above pretty nicely the top of value and is now moving nicely above here. So could see a move to the 200-day moving average. So pretty interesting. And then the other group. So again, it felt like a rotation today. Some of the names that I was in today did not fare well, and it was kind of interesting because the market was so strong. And I'm like, how do I have three or four positions that are down today? But it is what it is. Sometimes you're just not in the right groups, so you kind of have to rethink things. I'm going to talk about the banks too, but the software names probably get. I'm not too much of a fundamental guy, but probably the software names are getting a bit expensive. So you might see a little rotation. And again, I don't know this, and I'm not making the prediction, but I'm just kind of using a little bit of common sense to say that maybe some funds start to take a little bit of profits in software and go to some under-owned areas of the market. I would actually welcome a cooling off of the software names. I want them to digest. I don't want them to get super super overbought and then they crash. So this is just alternatives in my mind, but I would rather have this group chill out. So I took profits in a couple things this week, and I don't think I have a position left. Maybe I've got one small position left on in software. But for a while I had like five different positions on that I was juggling in and out of in software. But I got out of Adobe today. I had a long call spread, short put spread, and I had on Zscaler, which they didn't give any sell alerts. I just said, hey, I'm taking profits. Um, so anyway, and then of course we're trading a couple of those software names for earnings as well this week. So let's go to the banks. Let's go over to, I mean, this is the one that I usually like to trade is JP Morgan. I think it's one of the best in breed. So it did break above value, and maybe it sees a push up to 108. Now this is non-dividend adjusted, so it's going to look a little bit different. But this did break value for the day. If you look at the week, it's always, I think, depending on what your time frame is, it's okay to look at the weekly charts as well. Weekly, it's going to have that resistance ahead of it too, which is basically 106.77. So again, kind of a tough look. We could look at KRE as well. That's also good. Maybe it rallies a little bit more until the resistance. So for me, I will probably pick, if I choose to get into any banks, and I did not chase today. I thought about it like three or four times, but I did not chase today. But I would probably pick something like a JP Morgan. Let's see what BAC looks like as well. And again, just for a trade. So something on my radar to kind of think about for next week. Bank of America is actually in value, so you could trade that on the weekly chart versus 28.46. And if you want to look at the whole group, KBE, yeah, it's going to be hitting resistance too, but very strong. Look at the weekly chart in the banks. Look at how many green bars in a row. So impressive. So that one I will think that'll be again. It's nice to kind of give some. Sometimes we see option flow and we jump right in. I've learned after time if I'm not day trading, if I want it to be a swing trade, sometimes I just say you pump the brakes a little bit and wait. So, but then if you start to look at some other names, right? Mickey D's. We saw, again, the option activity gave me a nice clue to kind of look at this chart. But look at the daily chart in McDonald's. They really got beat up after earnings, I thought unnecessarily, and they just started coming back this week. And I added a small trade midday this today, and just kind of, I hate adding swing trades midday, but this one closed on the absolute highs, so we'll see if there's some continuation to it. And again, I did not add a big trade. I just went into some short-term call spreads, 180, 182, 180, 182 and a half, and Mickey D's. But it seems like today was a lot of value stuff. This is what the 1 hour chart looks like for McDonald's. There's a VPOC up here at 183. That's why I did the one, what did I say, 180, where is it, 180, 182 and a half call spread. So I'm targeting that virgin point of control. Couple other names that I haven't really looked at in a while. Disney. Disney actually went to the top of value for the week, so we'll have to see where that, ran all the way through the value area. That's called the 80% rule. Something firmly establishes inside value, it can make an 80%. There's an 80% chance that it can go all the way through value. So it did that perfectly. So I'm glad I did not chase Disney today. Again, another name that I looked at and said I'm not adding. I stuck to my rules. You stick to your rules. My rules were I really did not want to add much risk today. So being that I took about I think 3 trades off today, and then just added the OIH and the small McDonald's, I followed my rules. What else? There's a few other ones. Like I could not chase Home Depot up 2% today, and look at the thing. It closed on highs, but very nice, right? I mean, look at the. It looks. We're seeing this a lot. I call them abstract inverted head and shoulders, right? You got kind of your one shoulder, maybe your second shoulder on the left side, your head, and then kind of a weird looking right shoulder, like somebody who's got like a bad back, which I have a bad back, so I understand. But it is now above the now above the neckline, right, and the 200-day moving average. So maybe if we get an inside day on Tuesday, that might set up for a long, or even if it just comes back a little bit, if we get a little bit of volatility, I think that would set up nice for adding some longs. Lows acting really well as well. And then last one, I know this video is a little bit longer, but I like to go over some of these groups. Then look at what biotech, right? Same thing, kind of abstract. How similar does that look? Biotech and Home Depot. Not exactly over the 200-day moving average there in XBI, but you got the same type of pattern there. Left shoulder, second left shoulder, head, Fugazi right right shoulder, and then a move over the neckline, which I've got drawn in this one. Clearly, I've been watching this one, and there was some option activity in there for XBI today. I'd say XLV. I've been toying with this one all week. Did diddly squat in XLV, but to look at healthcare as well, also very strong, up 1.5%. So going back to, I'm going to try to wrap this video up, but the FANG stocks were not. I don't know, again, maybe because something with option expiration, but they were flat. They did not perform. And I said this earlier in the week, and I'll give him props again. I don't care, but I really like what he had to say. Joseph Fahmy mentioned that the FANG stocks look like they are more in some type of consolidation period or digestion than that seems to ring pretty true. And I went through, and the one thing that I've noticed is that the FANG stocks, they seem to only give maybe one day of strong performance. So, for example, Google, really tough name to trade in my opinion. But if you look at the performance, which I'm trying to bring up here on Bloomberg, you're only seeing, you get one day of really hot performance, up 2.3%, and then chop the rest of the week. Now I think they reported earnings, what was it, 1 or 2 weeks ago? But same kind of concept here. I guess here you had another day where it was up 1%, but just something to keep an eye on. It seems like you just don't get a lot of follow through. It seems like you get, which means that the takeaway from this is you really don't want to chase. I mean, look at Amazon this week, up 2.95% and no follow through whatsoever. Now they were in the news a bit, but even last week too, up 1.5%. No follow through. Actually, had 3 consecutive red days after that. So, the lesson from this is if this is how they're going to trade, try not to. If you manage to hit the right day, fine, take profits and don't chase. right now until the market action tells us differently. But that's fine. There's plenty of other things to trade than the FANG stocks, and we've certainly proven that over time. So that's it for this Friday video. Again, nice summary, I think, for the week. Hope you enjoyed it. Check us out, tribecatradegroup.com. Get involved. This is the stuff that we do all week long. So this is only what I put in these videos. I hope you understand that this is only like the tip of the iceberg. I don't do a lot of, you see my tweets during the day. Some other guys are much more active on Twitter. That's just not my game. We pick up on all these moves. We talk about them in the room as they're happening and discuss them. But I'm just not a guy who's going to put out, sometimes I do. I think when there's a really interesting day, but I'm just not going to tweet every time that there's a little call buyer in something. If I think it's really notable and the chart looks interesting, or there's something interesting going on, I'll tweet about it. But I'm just not going to tweet every time that there's a call buyer in a name. We go over all that in the trading room, and that's much more value that I can help and add during the day rather than just throwing out on Twitter that there's a call buyer in a name. All right, guys. Thanks for watching. Have a great weekend. Have a great long weekend. And see you back on Tuesday.